Electro Limited owns a factory that was acquired from Solar Limited on 1 January 2021 through a business combination. Goodwill of 192,500 arose on the acquisition of the factory. The factory has 2 production lines, and each production line represents a cash generating unit. Immediately identify IAS 36. The goodwill of 192,500 was allocated to the factory and could not be allocated to the individual production lines. The assets of production line A and B of the factory were as follows on 31 December 2021. Now we're able to identify for production line A and production line B, they provide us with carrying amounts and fair value less cost of disposal. In each production line, we have a machinery and equipment, fair value less cost of disposal in terms of the machinery of production line A, question mark, and then the fair value less cost of disposal for production line B for the machinery and equipment, both question marks. Production line A and B of the factory are housed in a factory building. On 31 December 2021, the carrying amount of the factory building amounted to 950,000. 60% of the floor space is used by production line A, and the remaining 40% of the floor space by production line B. The floor space used by each production line is a reasonable indication of the portion of the factory building devoted to each production line. The factory building, machinery and equipment as individual assets cannot generate cash flows independently. At the end of 2021, a competitor of Electro Limited announced that they will sell a product similar to the product manufactured by production line A at a significantly lower price than what Electro Limited is currently selling the product for. Therefore, immediately we are able to identify that IAS 36, paragraph 12, there is a possible indication of impairment. Therefore, we need to test impairment. Our carrying amount exceeds our recoverable amount. The value in use and fair value less cost of disposal amounted to the following on 31 December 2021. Now, they provide us with the total value in use and fair value less cost of disposal for production line A, production line B, and our factory building, and then the total in terms of the factory. Important, when we look at this, guys, remember, if you take this one step back, we have a factory. Within this factory, we have production line A and production line B, which is both CGUs. We have the building, which we will be able to divide into A and B, 40-60%, and we have goodwill. Now, the goodwill will be allocated to the factory, but cannot be allocated to the separate CGUs. The fair value less cost of disposal of production line A, production line B, and the factory as a whole was calculated as the amount that an independent third party will pay to acquire all the assets at 31 December 2021. The fair value less cost of disposal of the factory building was calculated based on the current replacement cost. Guys, for our level 2 students, think about your IFRS 13 principles. The value in use of production line A, production line B, and the factory as a whole was correctly calculated in terms of IAS 36, impairment of assets, by discounting future cash flows to a present value on 31 December 2021. A discount rate of 9% pre-tax was used. Required, disclose the impairment losses in the profit before tax note of Electro Limited for the year ended 31 December 2021 in terms of IAS 36, paragraph 126 and 130. Now, if you're not sure what to do, you open these paragraphs and you briefly scan through them and identify what do you need to disclose in your profit before tax note. Right, now before we start, I want you to always just take a few seconds and think, we need to ensure that we understand the scenario and what we need to do here. Now, if you look at the scenario, they've indicated to us that we have a factory, and within this factory, we have production line A and we have production line B. Now, production line A and B both is CGUs. And within each production line, we have machinery, equipment. And then we have a factory. We have a factory building where both of these production lines are housed in. And we are able to allocate this 60-40% to each CGU. Then they've also indicated to us that goodwill can be allocated to the factory, but not to our separate CGUs. Now, if you take this one step back, they've indicated to us that there's a possible impairment in terms of our production line A. Therefore, we will have to test for impairment. Now, how do we test for impairment? We need to determine our carrying amount of our CGU. Then we need to determine the recoverable amount of the CGU by calculating the fair value minus cost to sell and the value in use. Remember, this will be of all of the separate assets that we need to determine. Then once we have identified that our carrying amount exceeds the recoverable amount, that difference will be our impairment, and we will have to allocate this to the assets within our CGU. But we will have to remember to test for paragraph 105, IAS 36, paragraph 105. Right, now, we have identified in the solution, I'm just going to take this one step forward now, that there is an impairment in terms of production line A. Now, do we need to test production line B for impairment? No, we do not need to test production line B because our carrying amount is still less than the recoverable amount. Therefore, there's no impairment. But if you look at this factory, focus on your factory. Within your factory, one of your production lines will be impaired. Now, if a portion of the income from a production line decrease, do you agree with me that we will have to test the factory for possible impairment? Because one of your income streams will decrease, being production line A. And due to the fact that production line A's value decrease, we need to test our factory for impairment. Now, let's look at this. If our factory is impaired, remember, we will then first have to allocate that impairment amount to our goodwill, and then we will be able to allocate this to the production lines. Now, remember, the requirement indicated that we need to disclose our impairment losses in our profit before tax note. As part of your exam technique, you need to practice this. What do I need to do? What is my first step? I know I need to include the note in terms of our profit before tax relating to our impairment losses. They've indicated to us paragraph 126 and 130. Therefore, first, what I need to do is I include a template. Now, at this point of time, I don't know. I don't have my amount. I've not yet included my calculations. But that's okay. What do you need to do? You need to open your page and you include your heading, profit before tax. The following items are included in profit before tax, and you include a heading, impairment loss. That's it. You don't know what to include now. And if you're not sure, remember you do have your standard with you. You open your standard and you briefly read. Then step number 2, plan how you will attempt the question. What do you need to calculate, when and how? Right, now we have already discussed this. Then number 3, remember to transfer all your calculations to your template. If you're not going to transfer your calculations, they're not going to mark your calculations because the requirement indicated that you need to include the profit before tax section. Right. Now, in terms of step number 1, imagine that this is your template. You don't have any information included yet. You have only included headings, right? Impairment losses. This is it. You don't have the rest. You need to open your standard to identify what you need to include though. When we look at our steps, number 1, we need to determine the carrying amount of our CGU. We need to determine our recoverable amount, which is the highest between our fair value less cost to sell or value in use. And we need to calculate our impairment. We need to allocate our impairment to our assets, and we need to remember to test for paragraph 105. And I'm going to add step 5. We need to remember to transfer the calculations to the note. Right. Now, step number 1, we need to calculate the carrying amount of our CGU. Now, in the scenario, they've provided us with our carrying amounts. Remember, our assets is the machinery and the equipment. Therefore, if we look at the scenario provided, we have our carrying amount of the machinery 118,000 and our equipment 792,000. Therefore, a total of 198,000. Right, 198,000. The factory building they've indicated to us has a carrying amount of 950,000, of which 60% relates to production line A. Sorry, not yet. 60% relates to production line A. We have 950,000 times 60%, 570,000. And our total carrying amount is 2,550,000. Right. Now, our recoverable amount, our value in use provided to us, we refer to the information, is the 224,000. And we have our fair value less cost to sell 176,000. Therefore, the highest between these two amounts will be our value in use, step 2. Value in use 224,000 and carrying amount 2.5 minus the 2.2, and this will be 306,000, which is our step 3. Now, I know that when you look at this example, it appears to be basic, but this is the important principles that you need to know. Should you need to calculate the carrying amount of your assets, you need to please look at the scope in terms of IAS 36, number 1, and number 2, look at the separate assets standards, IAS 16, IAS 38. And in terms of your recoverable amount, your value in use, this normally level 1 students, they will provide this to you. Level 2 students, important, you should be able to calculate this. It's the present value of your future cash in and outflows. Remember, cash in and outflows. Depreciation is not cash, right? Then fair value less cost of disposal, normally provided to you. Level 2 students, remember the link with your IFRS 13 standard. Now, let's get back to this example. Step number 4, we need to allocate impairment loss to the assets. Okay, now important, look at the steps within step 4 for me. We need to first calculate our carrying amount after the impairment. Therefore, you will identify that I've included these steps at the top of our table. Then step number 2, determine the highest amount between fair value less cost to sell, value in use, or 0 of each asset. Sorry, not all, this should be of each asset. Why? This is in terms of paragraph 105. You need to identify the highest. Then step number 4.3, the carrying amount after impairment may not be below the highest amount determined in step 4.2 above. You see? The carry amount may not be below the highest amount. And then 4.4, if the carrying amount after impairment loss is below the highest amount, we need to allocate the balances to the other assets. Now, let's have a look at this in terms of our scenario. Okay, so in our table, when you have an impairment question, always make use of a table. We need to allocate the impairment loss to our assets. Remember, this is your major step 4. Now, when you look at this, we have a carrying amount before impairment. This 118,000,792,000, and we have calculated 570,000, 570,000. Therefore, the total of 2,550,000. Now we need to allocate these amounts. Now, how do we do this? If you look at our machinery, you will use the carrying amount on the total carrying amount of our CGU times our impairment. And this will be an amount of 142,560. Now, the same with your equipment. You use the carrying amount of the asset on the carrying amount of your CGU times your impairment amount. This is the 95040, and your factory building will be 68,400. Now, when you look at this, guys, the 306,000 agrees with our calculation at the top. 306,000. Right. Now, calculate the carrying amount after impairment. This will be your carrying amount before impairment. Let's call this A minus B. Therefore, A minus B, and this is your carrying amount after impairment. Now, identify the highest of your fair value less cost to sell, value in use, or 0. You will remember that they have provided this to us. I just quickly want to obtain the information, right? When you look at this, in terms of our machinery, fair value less cost to sell, we don't have this, right? But we have the equipment's fair value less cost to sell, 712,800. Therefore, if we transfer this, the highest in terms of our equipment, the 712,800, right? Then the factory building, you will identify that they've indicated to us the 910,000, therefore times 60%, and this will be 546,000. Now, in a question, if they provide you with all of the information in terms of your fair value less cost to sell, value in use, and 0, you need to identify, obviously 0, if there's no other values such as our machinery, will be the highest. But from the fair value and value in use, identify which amount is the highest. And this is the amount that you will have to include in this section of our table. Right. Now, step 4.3. If you look at our equipment first, I'm going to make use of blue. Look at our equipment line, please. The carrying amount after impairment is 696,960, but the highest is 712,800. Therefore, the total amount in terms of our equipment may not decrease to below the 712,800. Our carrying amount before impairment was 792,000. That 792,000 may not be lower than the 712,800 after impairment. Therefore, if you look at this, we may only impair our equipment 792,000 minus the 712,800. The maximum amount that we will be able to allocate to our equipment will be 792,200. This is the amount that we will be able to allocate to our equipment in terms of impairment. Then look at our factory building line for me, please. Our carrying amount before impairment, 570,000. Now our paragraph 105 amount, 546,000. Therefore, if we look at this, the maximum amount that we will be able to decrease our factory building will be 570,000 minus 546,000, and this will be 24,000. And we wanted to allocate 68,400, but we're only able to allocate 24,000. Therefore, allocate our 24,000, and the balancing figure we will be able to allocate to our machinery, 202,800. And when we add the machinery's amount plus our equipment plus our factory building, it will be the 306,000. And then I've just tested here to indicate to you guys, carrying amount after impairment of our machinery will be the 985,200. This is your 118,000 minus your 202,800, 985,200. Then the carry amount of your equipment will be the 712,800, which was your highest in terms of paragraph 105. And then your amount in terms of your factory building was your highest, 546,000. Right. Now we've completed our step 4. Now we need to include our step 5. In terms of our step 5, we need to transfer our impairment amounts 202,800, 79,200, and our factory building 24,000. We need to transfer to our profit before tax note. Our profit before tax note, impairment loss relating to production line A. Now we include the details included in the cost of sales in terms of paragraph 126. Now you do not have to include the references to these paragraphs. We just do this for you to be able to identify where this comes from. Okay, it's the total of 306,000, and we have included our 24,000, 202,800, and 79,200. Right. Now, remember, we have to still calculate. If you look at our scenario, we will have to test our factory for impairment, right? If we test the factory for impairment, take this one step back, calculate the carrying amount, the recoverable amount is the highest between your fair value less cost to sell and your value in use. And this is the test. Therefore, step 1, step 2, step 3 is the impairment. Right. Now, if we look at our next calculation provided to you, impairment testing of our factory. Right. Now, in terms of our factory, step 1, carrying amount. Now, our factory consists out of our production line A, B, the factory building, and remember our goodwill. Because when you look at this, our factory consists out of our production line A, production line B, our factory building 3, and our goodwill number 4. We need to calculate the carrying amount. Therefore, if we look at the carrying amount, we have now determined that our production line has a value after impairment of 1,698,000. This includes the machinery and the equipment, right? Therefore, when you look at our calculation at the top, the machinery and our equipment amounts to 1,698,000. Right. Then production line B has a carrying amount of 1,628,000. They've provided this to us. $1,628,000 production line B. Production line B, right? Then our factory building, we have a carrying amount and they've impaired this. Therefore, the 24,000 impairment, 950,000 carrying amount minus 24,000, and this is 926,000, and we have our goodwill, right? Therefore, our total carrying amount of our factory is 4,444,500. The recoverable amount, which they've provided to us, I'm going to indicate to you just now where. Sorry, not the recoverable amount, the information to be able to calculate our recoverable amount. If you look at our table at the bottom, the factory, we have 4,433,000 and 4.4. Therefore, if we look at this, the 4.433 exceeds the 4.4. In our calculation, if you look at our step number 2, our recoverable amount, the highest is the 4,433,000. And then step number 3 is to calculate the impairment, which will be our 4,444. Sorry guys, this is pretty irritating, I know. Exceeds the 4,433,000, right? And our impairment is an amount of 11,500. And first, we allocate this to our goodwill. Right, now goodwill is 192,500, therefore there is still a remaining balance in our goodwill. Right, now we need to transfer this to our note. Transfer our factory included in cost of sales is goodwill 11,500. Right, now very crucial guys. The narrative information at the bottom of your note. This is your easy marks, but you will have to remember this, and that's the difficult part of it. Therefore, I do recommend include a flag in IAS 36 when you indicate to you that this is your disclosure. Immediately you're able to open that flag and identify what do you need to include. Right, now in terms of paragraph 130A, an impairment test was applied to production line A since a competitor is going to sell the same products as produced by production line A at a much lower price. An impairment test was applied to the factory as goodwill is allocated to this factory. Therefore, you need to indicate the events and circumstances that led to the recognition of your impairment. Why do you test for impairment? A why. Then next, D, paragraph 130D. Impairment tests were applied to production line A as well as to the factory. The description of your CGU, which is production line A and the factory. Then E, paragraph 130. The recoverable amount of production line A was the value in use. Therefore, except for equipment and factory building that had a fair value less cost of disposal, which was higher than the allocated value in use thereof. Therefore, we need to indicate that we use the recoverable amount of production line A as the value in use. If you look at this, whether the recoverable amount of the asset is the value in use or fair value less cost of disposal. We've used the value in use. And then G. The recoverable amount of the factory was the value in use. Therefore, a discount rate of 9% is used to calculate the value in use. Remember, if you look at this, what happened? You take this one step back. We factory production line A, production line B. Now, goodwill allocated to our factory. Remember, we need to test for goodwill annually. Part of why we've tested the factory, right? Then, first, in terms of our recoverable amount, we've used the value in use of production line A. In terms of our factory, we've used the value in use. They've indicated to us that they've used a 9% discount rate.